My name is Stefania Arenas, and I'll be your co-host for today. I am part of Roots of Impact. I am a manager in the advisory and solutions team, and I led the Gender-Inclusive Fintech Fund in Latin America for the first phase of its implementation, which I'll explain briefly in a few minutes. But before I do, I wanted to introduce you to our co-hosts of today, Jordan, Asia, and Alan. Asia and Alan are joining us from Value for Women and ILF Ventures. And I would like to do a brief round of introductions while we hear from you through the chat where you're joining us from and your organization. In the meantime, Jordan, I'll pass it over to you for your brief intro, if you don't mind.
Thanks a lot, Estefania, and hi everyone. Yes, my name is Jordan. I work at Roots of Impact as a senior associate on the impact management team. So my work mostly focuses on helping early stage companies measure and manage impact effectively. And specific to this webinar, I was also the lead researcher for the research project that you'll have the chance to learn more about today.
Thanks, Jordan. Asia, over to you. Do you want to go ahead?
Hi, everyone. My name is Asya Tretansky. I'm one of our two associate directors of advisory services at Value for Women. We are a global organization that partners with the private sector to expand opportunities for women. Really happy to be here. Thank you.
Thank you. And last but not least, Alan.
Thanks, Stefania. Hello, everyone. My name is Alan Pierce. I am Impact Manager at ILF Ventures. We are an impact fund manager based in Latin America, investing mostly in Colombia and Peru and early growth stage companies that have a clear impact thesis. And my role is to support our companies in all the technical assistance work that we do, including the series of impact measurement studies that we do across our portfolio.
Thank you, Alan. So with that, I will kick us off in the webinar today. Thank you all for being here again. We're excited to have you with us today. So let's briefly go over a little bit of the agenda for today's webinar. I'll start us off with a background on the impact-linked finance for Gender-Inclusive Fintech Fund for Latin America. Then we'll move on to the research itself and the key findings. Jordan will then take us through the practical tools we've developed throughout the research. And finally, we will have a panel discussion with Alan and Asia as well. As I said before, please feel free to use the chat actively throughout the session. We will be collecting your comments and questions, and we'll address them in the Q&A. So let's dive in. Let's start at the beginning and why we're here today. To give you a bit more context on what brought us here. So essentially, we realized through a feasibility study, as I'm sure many of you have also come to the same conclusion, that across Latin America, there are millions of women that continue to face barriers to financial inclusion. What the short of the Impact-Linked Fund for Gender-Inclusive Fintech in Latam is the GIF Latam. So from now on, I'll be referencing the fund as the GIF Latam. So in the GIF Latam, we particularly focus on women in situations of human mobility, which means essentially these women are migrants, refugees, internally displaced populations. And within this particular population, these financial inclusion barriers are often greater. We know that fintechs are helping close this gap by expanding access to credit, payments, remittances, and other financial services for underserved populations, but access alone is not enough. A critical question remained throughout the GIF Latam, which is how do we know whether these financial inclusion tools, fintechs, products are actually translating into meaningful outcomes for women, particularly women in vulnerable communities such as people on the move. And this is where impact evidence becomes essential. Through the GIF Latam, which is supported by the Swiss Agency for Development and Cooperation, we have worked with fintechs in Colombia, Peru, and Ecuador to link financial incentives to measurable social outcomes. The GIF Latam was created under a SDC Regional Protection Migration Program throughout Latin America. And within that work, it has shown that the fintechs that we work with have both promise and also practical challenge at the same time. Promising financial inclusion in achieving that financial inclusion, but also practical challenges in measuring that impact. This is why we supported this independent research project that you are formally and officially seeing today, which is the strengthening impact evidence at the financial inclusion and gender nexus. So today's webinar will share the key findings, evidence gaps, practical tools that we developed throughout the research with the aim of supporting fintechs, investors, donors, and ecosystem actors to better measure, manage, and strengthen the impact. The goal for us was simple at the beginning, and it is still simple. Better evidence leads to better decisions, which leads to better outcomes, specifically for women and communities in terms of financial inclusion. So, with that said, Jordan, now over to you to deep dive on the research itself.
Wonderful. Thanks so much, Estefania. Great. So as mentioned in GIF Latam, we had the opportunity to conduct an in-depth research project last year. So I'll take you through some of the key findings now. One thing to please bear in mind is that as we have limited time for today's webinar, I won't be able to go through everything in full detail, unfortunately. But that said, we will share a link to the research report in the chat, so you can also read it later at your leisure. Cool. So moving on, the main focus of the research was on trying to make impact measurement and management, or IMM, easier, specifically for fintechs in LATAM. Most, if not all, fintechs track business metrics such as customer acquisition, repayment rates, and transaction volumes, but rarely measure social outcomes such as changes in women's financial control or improved household resilience, for example. So this sort of limited measurement of outcomes creates a tension. Whilst funders need robust evidence that their money is tied to real impact to avoid impact washing, most early stage fintechs still lack the IMM systems, staff capacity, and budgets to run detailed customer surveys, build robust data systems, or commission impact evaluations. So this research project therefore sits at the intersection of three needs. So on one hand, impact investors and donors need practical evidence-based metrics that can underpin transactions and impact reporting. Fintechs need guidance on which existing data could be repurposed as credible impact evidence without overburdening their operations. And TA providers and IMM specialists need frameworks that help them sequence support, build improved data capabilities, and avoid pushing companies into unsustainable measurement requirements. So this research was our attempt to address this tension. So together with my colleague and Roots of Impact research partner, Caro, we focused the research on identifying output metrics measurable by fintechs that can serve as sufficient proxies for demonstrating outcome level impact on women and migrant customers. And by output metrics here, we refer to operational data that should already exist within a fintech's data management system, whereas outcomes would occur over a longer time horizon and more so reflect the positive changes resulting from the fintech serving a woman or a migrant customer. And lastly, the focus for this research was tied specifically to the types of LATAM fintechs that most commonly serve women and migrant customers. So as such, only fintechs with digital lending and digital remittance business models were considered in scope. So moving on, we set up this research to address three primary questions. Each research question builds on the previous one. So first, how do LATAM fintechs contribute to positive gender and migration outcomes? As some data already exists to answer this question, the focus was more on compiling, synthesizing, and analyzing what is most relevant for digital lending and remittance-focused fintechs in LATAM. In a few slides from now, I will show you an evidence map which summarizes our answer to this first research question. Then, turning our attention to the second research question, we sought to understand which output metrics can be measured by fintechs that serve as credible and attributable proxies, leading to positive gender and migration outcomes. This question is most directly related to the main research objective from the previous slide, as you can see. So answering this research question led to the creation of an IMM tool we now call the Output Outcome Metric Menus, which I'll introduce later on. And lastly, the third research question built on the first two by asking, under what conditions can certain output metrics be used as proxies for fintechs to demonstrate their contribution to improved gender and migration outcomes? And answering this question helped us get very pragmatic, focusing on using the output proxies identified earlier when certain conditions arise. We will show you how this works later by introducing another IMM tool generated from this research, which we refer to as the decision-making framework. Now, we were able to answer these research questions through a mixed methods approach. Most of this work took place last year, and we are using 2026 to share our results publicly with all of you to start conversations and also gather some feedback. So we began our research efforts last year by conducting desk research, which was mainly focused on answering the first research question. This was all about reviewing what's already been proven about how fintechs contribute to livelihood improvements for women and migrant customers. In total, there were over 20 studies that were analyzed, including academic papers, research reports, and practitioner case studies. We also conducted a bit of secondary data collection and analysis by reviewing impact data from a few Colombian fintechs that have already been supported in the GIF Latam. Next, we conducted 8 key informant interviews. So the overall objective there was to corroborate or challenge some of the desk research findings, while also learning more practically about what is working and what isn't when fintechs attempt to measure the impact they have on the women and migrant customers they serve. These interviews were held with different stakeholders, such as representatives from Latam fintechs, Roots of Impact colleagues, and subject matter experts. Later today, you'll have the chance to hear from 2 of these subject matter experts, Asya and Alan, whom we interviewed at this stage of the process. After wrapping up the interviews, we then consolidated our initial results and presented key findings during a validation workshop. So this workshop was interactive and asked participants to actually use the initial IMM tools developed through this research with fictional fintech case studies. In short, we were trying to use the 2 tools in a simulated real-world environment to test and see whether certain output metrics could in fact be measured by fintechs and used as sufficient proxies to demonstrate their outcome level impact on women and migrant customers. We then collected feedback from the workshop and used it to improve these 2 tools, which I'll show you in a moment. We also produced a report answering the research questions I shared earlier and explaining the methodology we used to arrive there. And last but not least, today we're hosting this public webinar to share the results and tools with all of you. Now, one caveat worth mentioning is that this research is primarily meant for impact investing and impact-linked finance practitioners rather than academics. So while we used a methodology that was as rigorous as our time and budget allowed, a PhD candidate, for example, could spend years really answering these research questions through other mechanisms, such as field studies or evaluations. This is not to take away from our results, but should help frame this research as a stepping stone towards even more in-depth studies that corroborate or challenge our findings. So moving on, I will now share at a high level the main takeaways from the desk research part. So as mentioned, we reviewed over 20 timely and high quality studies relevant to our research questions. However, only 1/3 of them focused on LATAM specifically. So as such, at times we had to extrapolate findings from other regions in Africa and Asia to fit LATAM's context. This was one limitation and points to the importance of building up a stronger evidence base for financial inclusion and its effects within LATAM's specific context. And in terms of coverage, perhaps unsurprisingly, these studies provided the strongest evidence for answering our first research question related to how fintechs contribute to gender and migration outcomes. For our second research question, it's worth mentioning we used a very useful research that's produced by CGAP, specifically their Impact Pathfinder platform. This was super helpful in providing initial ideas for relevant off-the-shelf metrics that could be referred to as a starting point. And lastly, I'll touch on this more on the next slide, but we found 3 clear pathways for how fintechs contribute to positive outcomes for women and migrant customers. These include expanding financial access, enabling greater digital financial control, and facilitating business growth amongst women entrepreneurs. A few quick notes also on what was still missing from the desk research. So first, there was limited evidence on how financial products and services contribute to livelihood improvements for migrant customers specifically. This then tilted the research results being perhaps more meaningful for gender impacts compared to migration. So while the desk research uncovered that fintechs could help migrant users save significant costs on things like remittance transfers, to share one example, there was relatively little additional evidence to point to beyond this. Secondly, regardless of their commercial stage, we found that most fintechs track business metrics or operational data rather than social outcomes in a very systematic manner. This is not too surprising, I think, but one of the downstream consequences of this was that there are limited publicly available studies that validate causal pathways between outputs and outcomes emanating from fintech activities. So to understand the research results, then, especially how output metrics can proxy for outcomes, we can at best say that such proxies have a very high likelihood of leading to the outcomes materializing for women or migrant customers within a two to 3 year timeframe. But we cannot say with 100% certainty whether such effects will occur. So context in that regard is always important, and this is exactly what the decision-making framework aims to help practitioners with. Okay, let's move on. So this is a map summarizing the desk research results. So in a nutshell, it shows the relative strength of evidence for how fintechs contribute to different types of gender outcomes. As such, it directly answers our first research question. I would also note that this evidence map doesn't focus on migration-related outcomes, given the limited research available. However, for certain fintechs serving women within a common migration corridor, such as Venezuela and Colombia, there can certainly be some overlap. So now reading from left to right, the strongest evidence was found for two outcomes specifically. These are improved access to finance and improved financial control. In contrast, weaker and what we term moderate evidence was found for three other outcomes, namely improved financial resilience, improved business growth, and improved disposable income. These outcomes then map to one, two, or all three of the output outcome metric menus, which is one of the IMM tools emanating from the research that I'll share next. And the number of relevant research studies underpinning each expected outcome is also shown in the diagram. So in terms of geographical spread, the orange part of the color wheel shows LATAM specific studies, with the blue part showing the global studies. One other point to note is that in order to build this evidence map, each research study we reviewed was classified into three categories, which was strong, moderate, or weak. So strong studies were RCTs or other longitudinal studies showing clear causal pathways for outcomes occurring. Moderate studies highlighted correlational evidence, and those classified as weak would refer to publicly available case studies with anecdotal evidence for how fintech products or services lead to positive gender-related outcomes. So I'll leave it here for now. I think it's a lot to digest, but if you have any questions, we can address them later during the Q&A portion. So I will now move on to introduce the two tools that were generated from this research. As I mentioned, tool one is this output outcome metric menus, and tool two is what we call the decision-making framework. They're designed to work in tandem. So whereas tool one shows what LATAM fintechs could measure in terms of operational data that could proxy for outcome level impact, tool two then helps address what fintechs should measure within their specific context. So let's begin now with the output outcome metric menus. As I mentioned, there's three of them, and you can see a few screenshots on this slide. Okay, so before sharing the menus and walking you through how they work step by step, I will provide a brief overview of the tool. So as already highlighted, its purpose is to provide evidence-based output metrics that serve as credible proxies for gender and migration-focused outcomes. These menus are shown in PowerPoint type format. There's three of them, and practitioners should select only one menu to use at any one time, depending on the business model of the fintech. So in that regard, menu A is meant specifically for digital lending fintechs that primarily serve women and/or migrant customers directly through a B2C model. Menu B is also meant for digital lending fintechs, but should be used primarily for those serving women and/or migrant customers via an intermediated B2B2C model. This menu would be better suited for example, a digital lender focused on serving women-led MSMEs. And lastly, menu C is meant for fintechs offering digital remittance products, primarily serving migrant customers. So I think there's a couple of animations on this slide, Estefania. Perfect. Thank you. As was already said, these menus were built from the research methodology shared earlier. In terms of how to use the menus, impact investing or IMM practitioners would first select which menu to use based on the fintech business model, then analyze the metrics on the menu based on their relevance to the fintech's operating context before finally picking up the decision-making framework tool for the next steps. This means that these menus are static in the sense that there's no action for the practitioner to do other than to select the correct one and analyze the metrics preliminarily before then turning to the second tool to evaluate metric feasibility and select the most suitable one for tracking. And lastly, a few quick considerations to keep in mind are that metrics listed on the menus should reflect operational data that the fintech likely already has within its system, not necessarily new impact data that they're being asked to collect via a survey, for example. Secondly, the menus are organized from top to bottom based on the relative evidence strength associated with each outcome area. I will show you what I mean by this in a second. And third, the tools are intended to complement practitioner judgment and analysis rather than replace it. So as such, the tools should certainly be contextualized to fit the fintech and how it operates, not the other way around. All right, let's move on then, and I'll show you the first of the three menus. So here on the screen is menu A, which should be used with Latam digital lending fintechs serving women customers primarily via a B2C model. As you can see, the menu is organized with the specific outcome areas listed in the left-hand column and the corresponding output metrics that could serve as proxies for them, then listed in the right-hand column. For menu A, improved access to finance is the outcome area with the strongest evidence base, which is why it's listed at the top of the menu. By improved access to finance, here we refer to the way in which the fintech contributes to the enhanced ability for its female customers to obtain credit, savings, payments, and insurance services from formal financial providers. For all outcome areas, specific definitions are also included in the report to share a little bit more context and help you navigate these things. Okay, so how this menu can be used in practice is that you can click on a specific output metric and then a clear rationale explaining why that metric serves as a suitable proxy for the outcome is listed. For example, here we can see an output metric centered around the percentage of women customers receiving credit limit increases within, for example, 24 months of availing their first digital loan from the fintech. Clicking on that metric, rationale would then pop up to explain that based on the research evidence, repeat borrowing indicates successful loan utilization and improved creditworthiness, demonstrating sustained and deepening access to formal credit markets rather than relying on informal predatory lenders. This progression from initial access to increased credit limits represents financial access expansion. And lastly, while the actual studies from the desk research that underpin these rationales are not cited in the menus themselves, they are highlighted in the full research report in case anyone does want to go one step deeper. So moving on to menu B, the same format applies as you see. We'll go through one more example here just to showcase how it works. As mentioned, this menu should be used with digital lending fintechs focused primarily on serving women-led MSMEs via a B2B2C business model. So let's now zero in on one specific outcome area of improved financial control. So this refers to how the fintech contributes to the enhanced ability for women entrepreneurs to decide how money is earned, saved, and spent within the household, and to keep independent custody of those funds. We can then click on one of the relevant output metrics correlated with that outcome and read why that is. So clicking on this particular metric that says the percentage of women-led MSMEs accessing multiple financial products, The rationale then highlights that a fintech customer using other financial products beyond just loan uptake demonstrates financial sophistication and proactive resilience building. It then goes on to say that women entrepreneurs accessing credit, savings, and insurance, to cite one combination of financial tools, shows enhanced financial control through diversified risk management strategies, reducing their vulnerability to business shocks while maintaining capacity for upside growth. Hopefully this is all making sense. I know it's a lot of information, but we will move on and showcase menu C now, which is meant for Latam fintechs with digital remittance products serving women migrant customers. So for menu C, improved access to finance was again found to be the outcome with the strongest evidence base. One example here of a relevant output metric associated with this outcome is the average speed of remittance delivery for women using the fintech product compared to analog or traditional channels. This is, again, surely something that any fintech should have, I presume, within the capabilities to measure, since it's part of their USP. As part of their market research, the fintech team most likely would have benchmarked their speed of payment transfer compared to brick and mortar alternatives, for example. And when you click on this metric, the rationale then explains how faster money transfer enables women migrant customers receiving the remittances to then respond more appropriately in financial emergencies to enhance their overall planning capabilities. Okay, I'm going to pause here. Great. I'm going to now introduce the second IMM tool. So we call this one the decision-making framework. Again, this tool is designed to be used in tandem with the menus that I just showcased. All right, so the overall purpose of this second IMM tool is to guide practitioners through a systematic evaluation of the output metrics from the three menus. In doing so, this tool helps to ensure that selected metrics are operationally feasible, attributable to the fintech's business model, and also aligned with their current IMM capabilities. The development of this tool primarily stems from the validation workshop held with practitioners and funders, where we tested the decision-making framework using fictional fintech case studies to see how useful they were in a simulated real-world environment. In a moment, I will explain how to use this tool step by step. At a high level, though, the tool evaluates each potential output metric against 5 core criteria using a visual decision tree. The end result is that the tool flags proxy metrics as good fits for tracking versus others deemed less suitable or requiring further technical assistance. Before showcasing the tool, a few key considerations worth highlighting would be first, the validity of using one metric versus another is super context dependent. So metric selection should definitely be grounded in pragmatism based on what the fintech can actually measure now using its current data system, rather than what may be ideal to measure in the long term but isn't feasible now due to limited resources. Next, the tool highlights certain red flags that may arise for selecting certain metrics. Such red flags could include things like how overperforming on one metric for digital lending fintechs could inadvertently cause overlending to certain customers that put them in a more precarious situation than beforehand. So to avoid these red flags, it's key to always keep the fintech business model in mind and ensure that each metric aligns with their commercial strategies. And lastly, this framework is intended to kickstart conversations with the fintech about feasible impact metric selection, rather than serve as a prescriptive solution ready to put into transaction design immediately. This is super important to keep in mind when using the tool. All right. Moving on, I'll now quickly explain how the tool works step by step. So first, you would select the most suitable output outcome metric menu that best fits the fintech business model. All outcome areas listed on the selected menu would then appear on the tool alongside their relative evidence strength from the research. After that, you'd then review each outcome area by answering 3 questions in the columns to the right. For each, there is a brief description in italics to help guide you on answering each question with either high, medium, or low. And in case you're in between one answer or another, you can also put low to medium too, and then come back to it later if needed. So the first question here asks about impact alignment. So essentially this asks you about whether the outcome is aligned with the fintech's impact goals, and also whether the fintech has the IMM capabilities to track the data that might be needed to show their contribution to the outcome occurring. You then move on to the second question, which asks about commercial fit, or whether measuring a metric related to the outcome area actually supports the fintech's business model over time. If the outcome in question isn't ultimately useful to the fintech by giving them some insight into how they're performing commercially, then you'd answer this question with low, for instance. The last question here then asks about the expected positive change for the target group. Here you'd think about whether the outcome area you're evaluating would help show whether the target group being focused on, such as women or migrant customers, are seeing their livelihoods improve in some way. And after you've finished reviewing each outcome area, you'd then proceed with step 2. So for step 2, after the most relevant outcome area has been chosen, you'd then proceed with analyzing the corresponding output metrics. This tool will automatically display the metrics associated with the outcome you've selected. And your task here is then to go through each of them and jot down some notes in the column on the right-hand side to keep track of ideas and comments for each. For this part, and to make the next step easier, I'd suggest picking the most suitable output metric and using that with the remainder of the tool. So moving on, step 3 then goes one layer deeper. So here you'd actually analyze the top 1 or 2 most suitable output metrics using the 5 core assessment criteria. There is a key question associated with each criterion, which you're asked to answer either yes, no, or not sure to. There's also a notes column on the right-hand side where you can add any comments on why certain answers were provided. So now let's take a minute to go through the 5 assessment criteria. So we have impact attribution, commercial incentive alignment, data availability and quality, data collection costs, and measurement feasibility. So first is impact attribution. So the key question to answer here is, can changes in the fintech performance on this metric be reasonably attributed to their products or services rather than external factors that may also influence customer changes as well? And the second criterion is commercial incentive alignment, which asks you whether tracking performance on this metric over time would encourage positive business behaviors that benefit the fintech's customers, or whether it could create unintended negative consequences. The third criterion looks at data availability and quality. So this asks if the fintech currently collects data for this metric, and if not, could they at least easily start collecting it through their existing customer touchpoints without major changes. Fourth, we look at data collection costs. So this asks whether the cost of collecting data for this metric is justified by the business insights it's supposed to provide, or whether instead it requires significant extra resources and therefore is not worth it to collect and manage. And then the last criterion to evaluate is measurement feasibility. So this asks if the metric can be measured accurately and consistently using the fintech's current operational capacity and tech stack. Now, giving an answer of no to any one of these 5 criteria would likely result in the output metric being unideal. So after analyzing each criteria for the metric by filling out the respective answers, the tool will then automatically provide you with a preliminary result. These include good fit if the output metric is indeed a good choice for tracking, further analysis required if the output metric requires deeper analysis and discussion with the fintech, consider TA if the output metric may be suitable with some additional IMM support provided to the fintech, and lastly, try next output if the metric isn't suitable. Especially if the first most suitable output metric you use for this step doesn't work out, the idea would be to then repeat this third step for other output metrics associated with the most relevant outcome area you've identified for the fintech in step 1. Hope this is all making sense so far. All right, moving on. After you've finished analyzing up to 3 metrics from the most relevant outcome area in the previous step, the tool will then automatically generate a preliminary summary table with the results. Seeing this table helps you compare then which output is likely to serve as the most suitable proxy metric for the fintech to show its contribution to the outcome area over time. For example, in this screenshot, we can see that the output metric in the middle column appears to be the most suitable because it passed 3 of the 5 assessment criteria, with only 2 criteria listed as not sure that could be answered later by the practitioner using this tool. Okay, next, we can see that the tool will also show you a shorter overview table with all metrics considered to be a good fit based on the previous analysis. So in this example of the screenshot on the slide, we can see that output metric 1 is the most suitable for this particular fintech to track over time. And if I squint my eyes, this appears to be the Net Promoter Score, or NPS, gap between women-led MSMEs and male-led MSMEs, measured at least annually, just to share one example. Then lastly, now that you've done the analysis and the tool has helped you identify the most suitable metric, the final part of the tool then asks you to assess a few additional considerations. These are helpful to keep in mind as you then take the metric or metrics and discuss them with the fintech for tracking. So I won't go through all these considerations in the interest of time. However, just at a high level, this part of the tool would ask you to consider things that may be a little bit more specific to the design of typical impact-linked finance transactions. So therefore, if you're an impact investor using this tool with one of the fintechs in your portfolio, for example, some of these aspects may not be the most important for you. So depending on who you are and how you're using this tool, you can certainly feel free to spend as much or as little time analyzing these considerations as needed. And that's it. I talked for a long time about the tools and the research. I hope everything was clear for you all and you enjoyed the walkthrough. At this point, I'll pass it back to Estefania to continue with the panel discussion.
Thank you, Jordan. And thank you for walking us through the tools themselves. I think that is one key aspect of the research. As Jordan mentioned, we were trying to make it a practical tool rather than an academic tool. And I hope this can translate into the tools once you get to know them, once you get to download them. These tools are actually already available for download, but you will also receive them this week after the webinar. So onto the panel itself. Throughout the research project and the tool creation process, we also received input and valuable feedback from Alan and Asia, and I would love for you to hear their thoughts on a few questions that we have prepared for them. But please feel free to pop in your questions or comments in the chat, and hopefully we can get to them in a Q&A session. Whoopsie, give me 1 second as my screen just completely froze. Okay, perfect. To start us off, I would like to ask Asia and Alan first. From your experience in general, what would you say are the most salient or burning issues that the fintechs face when attempting to measure their impact? Asia, if you want to go first.
Sure. Thank you so much, Estefania. Thank you, Jordan, for the thorough walkthrough. So as many of you know, many fintechs are actually startups. So what this means is that they have quite limited budgets and even more limited budgets that are dedicated to measurement. So the measurement that they do engage in often is focused on bottom line considerations. So they prioritize indicators that are tied to looking at their risk, their potential revenue, and their profits, much more than measurement looking at impact. Interestingly, oftentimes these fintechs, they're very data intensive. They actually do have a lot of data, but they aren't using it intentionally to look at impact. And then if they are looking at impact, many of them aren't sex disaggregating it. And I'll get into this a little bit later, but they're really missing a key impact opportunity to leverage the data that they have to make better decisions.
Thanks, Asia. And Alan, what do you have anything that you would like to add to what Asia just mentioned?
Definitely. I'm very aligned with Asia's perspective. From what we've seen with the fintechs in our portfolio, They tend to have very strong operational data. They know approval rates, repayment behavior, ticket sizes, etc. Um, but they don't have a system in place to organize that information into, or kind of where it might fit into a theory of change. So they can, when we approach a potential investment or when we're working with a current investment on impact strategy, they can generally tell us what's happening on their platform, kind of at an output level. But they don't have a way of connecting that to outcomes or what's actually changing for customers. And for us, when we're measuring impact, that's really what we care about. What are the improvements or changes that are happening in customers' businesses or lives? So the work that we try to do to address that challenge is helping them kind of make that connection. Um, and this research, I think, is going to be very useful for us and other practitioners because um, it's actually doing that. It's actually kind of closing that gap, um, reducing the amount of resources budget that is needed to be able to do that work, and go from, this is what's happening in our portfolio or in our customers on our platform, to what's actually potentially changing for those customers, which is where a lot of the impact measurement work needs to take place.
Okay. So essentially, from Asia and Alan's perspective, I think it's pretty aligned in the challenges that these fintechs face daily. But I wanted to ask Jordan if you think that these commonly known challenges in fintechs, do you think the challenges change or grow or have any impact if we're talking on trying to measure positive impact specifically for women and migrant customers, which is the target group of the GIF Latam?
Yeah, it's a good question. I mean, I fully agree with Asia and Alan's points on the topic of gender. On migration specifically, what I've seen is that it can be quite tricky for fintechs at any commercial maturity stage, or no matter the amount of resources they have, really, to disaggregate their data by migration status. So sometimes it can even be like ethically infeasible for data privacy reasons or just generally overly burdensome for a fintech to determine whether a certain borrower, for example, or remittance receiver migrated internally within a certain country or across the border into another country. So usually a proportion of a Latam fintech's customer base would likely have a migration background, especially if they're operating in maybe Colombia, for example. But then actually validating this migration history beyond like self-reported data from the customers themselves is quite challenging. So this is a tricky one. I haven't come across like best practices for addressing this specifically beyond, like I said, the self-reported data, which is maybe the best solution. But I'd be curious if Asia and Alan, you've encountered something like this before, or if anyone else has particular solutions around it.
And if I may jump in also, what you're mentioning about validation of data is key. And in fact, we did have this in with the fintechs in the GIF Latam. We've been trying to sort of form an alliance or a direct relationship with Registro Único de Víctimas, which is the governmental entity in Colombia that has the official registration for internally displaced people. And we did achieve to validate that data in one of the fintech's user base, and the results were actually pretty amazing to see because we always had this assumption and this proxy on, we think by estimating the amount of or the percentage of internally displaced population in Colombia, we believe and we estimate that this is the amount of the portfolio for the fintech that belong to IDPs. But seeing that result and being able to validate that data and see the result come to life and be able to put a name and a face to that internally displaced person and now move on to the next phase of creating a tailored product for this specific customer profile. It's actually very valuable, and it's been very impactful on the fintech as well, and how they approached this population specifically. So that validation of data is key, and I agree with you. And within those challenges, I think that um, I know that entities such as Value for Women and ASIA, you support multiple social enterprises in building and strengthening their impact measurement and management practices. But the question that I wanted to ask you was, do you know of any solutions that might be out there for fintechs or their supporters, be it impact investors like Alive Ventures or even TA providers, that would enable easier and more smoother impact measurement and management practices for the fintechs?
Yeah, thanks so much for the question, Estefania. I mean, I would be remiss to not say that the tools in this report really are excellent. They're right-sized, and what I really like is the menu of options, which is how we like to work as well, right? You give options, and then you adapt to each business's unique context and operating environment. Um, Maybe two other tools I would point to for fintechs, and I would also say relevant for financial institutions. Many of you may have heard of the global 2X criteria and certification requirements for financial institutions that include fintechs. 2X sets benchmarks, and also they point to easy measurable metrics for looking at how financial institutions are performing on gender specifically. So they have impact proxies that cover the consumer side, looking at representation, whether there is a specific product that targets women. And then they also direct fintechs to look internally within their organizations, which we haven't talked about as much, but we would argue is quite important as well, and to look at gender representation in the workforce and leadership of the fintech. And then the second, Jordan, you actually already mentioned, is a much simpler metric. Many of you may know this from other contexts. It's the Net Promoter Score. This is a simple and elegant measure of self-reported satisfaction, which is correlated with impact. And with some of the fintechs we work with, we have seen them, despite cash and personnel constraints, we've seen them be able to deploy NPS through short pulse surveys to a segment of their clients. And then they're able to disaggregate the results, and then they can also segment by other variables and get a good sense of people's satisfaction and where there are gaps that they need to investigate further. So I would start with those.
Perfect, thank you. And I'm curious to hear Alan's perspective on as an impact investor, right? Because we've heard from Asia on, supporting these fintechs in building and strengthening their impact practices. But from Alan's perspective, when you're actually assessing a fintech during your due diligence process in Alive Ventures, what do you deem as good enough impact evidence? What is it that you take a look at and say, okay, this is a strong IMM system, or this is not so much a strong IMM system and they need to improve?
Mhm. Um, so in general, we don't expect perfect impact evidence at a due diligence stage. We kind of almost never see completely fleshed out impact management system, impact measurement systems, particularly in early growth stage fintechs, this kind of area where we're investing. Um, with that said, there are things that we look at to kind of build a credible impact story. So one thing that we do look at is, firstly, are they making an effort to use real data to kind of build their impact story? And it's not just marketing language in their deck. There's actually kind of an effort there to use some data to paint this picture of impact. And part of that means, looking at, do they have a clear impact thesis? Is there a thesis that's intentional, kind of built around the core business model? that they're then using to bring in these metrics and kind of describe an impact pathway at least. And then we also, what we look for is, do they have any system in place to look at potential downside risks or risks that may be part of their business model that they are also measuring to then be able to mitigate that risk, or negative impacts. So do they have safeguards in place around repayment burdens, or making sure that their terms are very transparent, issues around pricing, collections practices. So we're not just looking for a positive impact story and a clear impact thesis. We're also looking for, particularly in the fintech space, potential safeguards around negative impacts as well.
Thank you. Thank you. That's really helpful because, as you said, like I think you as impact investors can tie all the ends so that it makes sense, but you also have to make sure that there is a good enough base for them to move on into translating that into impact. And of course, I'm guessing that you also have TA for that once, of course, you go ahead with the investment. I wanna pause there with our questions. I do have one more closing question, but I want to pause there just to check if we have any questions from our audience today. If you want to pop your questions in the chat or even raise your hand, and you can just unmute yourself and ask the question. I'm gonna wait 20 seconds and see if there are any questions from anyone. Because if not, I do have a closing question for Jordan specifically. All right. So, Jordan, to close us off, and tying this back to the work that the work that Value for Women does with the fintechs and helping them strengthening their IMM systems, the work that ILF Ventures also does with their portfolio in helping them strengthening their impact practices as well. What role do you think that the research that we saw today, and similar research projects and similar research pieces and practical tools could play in making IMM easier? IMM, when I say IMM, I say impact measurement and management systems, easier and more evidence-based for fintechs or for social enterprises in general. What role do you think we could play in that regards?
Yeah, thanks a lot for the question. I mean, as was already mentioned many times, the measurement of outcomes is really difficult, especially for early stage startups that have limited resources and budgets and so on. So, yeah, I think applied research like this one can therefore play a really important role in trying to make IMM easier in solving some of the pain points. Yeah, the point of this research was really to take the data that fintechs already have on hand, or hopefully should have on hand, and use them as proxies for customer outcomes likely to occur in the short to medium term timeframe, let's say. So yeah, such operational data could then be sort of repurposed as good enough for impact investors or donors that are supporting them. So yeah, using output data as proxies is, I think, especially helpful for early stage fintechs with limited resources or for actual measurement of outcomes and doing that. So and even beyond the fintech sector, like this type of applied research has a ton of value to help solve, I think, one of the main IMM bottlenecks in the industry. So the same methodological approach could be used in different sectors and geographies to analyze the evidence base and find suitable output metrics capable of serving as proxies for outcome level impact. So yeah, we'd be happy to discuss with anyone on the call if this is a type of research that would be interesting for them or yeah, their organization.
Thank you, Jordan, and especially if after the webinar you go ahead and take a look at the practical tools. If you have any questions, we're very, very happy to chat and to look for places for conversations and discussions around the tools themselves. And with that said, I wanna close the webinar of today. Thank you all for your insights, Asia, Alan, Jordan. I hope that the resources that you heard, now I'm addressing the audience, but I hope that the resources that you heard and the tips from Jordan, Allen, and Asia today support the work that you're doing regarding strengthening impact measurement and management practices. Um, One thing before we leave you to it is we are going to send three things this Friday, which is one, the webinar recording, if you want to share it with any of your colleagues, and for those who weren't able to make it today. The second one is a summarized version of the research report, especially if you want to share with other colleagues, stakeholders that you know who might be of interest, but they didn't have the time or they're very busy people. We did create a very highly summarized version of the report itself, and then we will also share the direct access to the tools, so the links to the tools that Jordan introduced us today, so that you can give it a go, see how they work. And again, we're very happy to discuss them and to just create a place or a space for collaboration if you feel like it. And with that said, being on the exact time, once again, thank you, Asia, Alan, and Jordan, for your insights. And thank you to all the participants who connected with us today. Thank you for joining and have a great either day or afternoon, depending on where you're from. And that is all. Thank you very much.